Hello and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Now, life hasn't quite been the same since the 8th of November, has it? From payments to savings to the portfolio, demonetization is impacting every sphere of your life and, of course, my life as well. Many of you out there might be wondering whether this is the time to churn your investments, or perhaps what the ideal asset class mix would look like, or whether this is actually a good time to buy property given falling interest rates. Well, today we have top experts from Edelweiss joining me on the show to answer exactly those questions. We've got with us Mr. Vikas Sachdeva, CEO of Edelweiss Asset Management, and Anil Koturi, Head of Retail Finance, as well as CEO of Edelweiss Housing Finance. Gentlemen, welcome to the show. Welcome to Money, Money, Money. It's a pleasure to have you on, and there are plenty of questions out there. So I'll start with basic introductory remarks and thoughts. Demonetization. Do you think it's actually been disruptive when it comes to the world of personal finance, wealth creation and investing? Vikas, you go first.
Well, a tough question to answer simply because there has been no precedent about that. While the impact on corporate earnings will be seen after some time, okay, but what is for sure is the life of the common man is going to change. I think a lot of digitization in his personal life will already start to come in. There will be a lot more taxpayers coming into the ambit. So I think from that point of view, if I have to just summarize, I think it will have a positive spin-off in terms of the average person's life from a convenience point of view because of digitization and hopefully reduction of taxes going forward because of so much of money coming into the system.
Okay. Anil, initial thoughts on what sense you've made of all this, and of course your side of the business when you're looking at the NBFC space and lending and a lot of retail financing. How are things changing?
People are still trying to come to terms with what has happened. Okay, businesses are down, retail businesses are down. Okay, people have stopped borrowing over the past month as they look at how to reorganize their lives. Okay, a lot of the changes that Vikas mentioned will happen now. Okay, he mentioned the migration to digital payments and how transactions are going to move online, and I think the government has set for itself a target of moving 70% of all transactions online in the medium term from the current 10%. All that is going to happen, but currently I think people are still trying to reorient their business models and their daily working lives to align themselves with the new reality. So yes, the pangs of adjustment we are still going through, and it'll maybe a month or so before things actually settle down on that front.
Okay, because broad thoughts on the way different asset classes are behaving, and equities for instance. I mean, the market obviously has been taking its own time to adjust and sort of digest this entire process that's underway. Is there a need right now to tweak too much in the overall portfolio, you think, or should one actually wait it out and let the dust settle?
I would be a voter in terms of letting the dust settle. I think with equity, typically an investor's psyche tends to get very transactional. He tends to react to happenings in the market, whereas in terms of physical assets, whether it's gold or real estate, he's more long-term in his approach. If you just replicate the long-term approach in terms of equities, you could actually take advantage of the power of compounding. I mean, the last 10 years, the mid-cap index has grown by 17 times. Okay, so that's not anything to be sneezed at. It's just by doing nothing, staying invested in index, doing nothing. So one should just move away from this transactional point of view and just be there, not do anything right now till the time the dust settles.
Okay, fair enough. Let's talk about also, another facet that's kind of compounding the situation for investors out there, and that's the movement in interest rates. The general sense is that rates will keep moving down, both on the deposit side and on the lending side. Would you agree?
That seems to be the consensus. Rates will come down in the medium term. There's even a point of view that it's going to be a secular downturn in terms of interest rates, and we will settle into a semi-permanent cycle of lower rates. So that's what is a popular view doing the rounds. Yes. As a borrower, the implications are that you pay lower EMIs on your home loans. As an SME customer, you pay lower EMIs on your debt. So that should in turn translate into quicker home ownership and greater profitability probably for the SME.
So you mentioned home loans, and let me ask you about perhaps the most exciting market for a lot of people out there, and I'm talking about property. There seems to be a perception that we're looking at a significant fall in property prices. Would you agree with that assessment, number one? And number two, is this the time to go out and look for deals and sort of try and fish out some investments in real estate?
let me just tell you how the property market is organized, okay, and share some information with you. 80% of all home loans are less than 25 lakh rupees. And about 93% of all home loans are less than 50 lakh rupees. The prices in that segment are hugely resilient. It is only the prices of properties beyond 50 lakh rupees that will see some sort of a correction, because those are anyway thin markets, and those markets also have a larger share of investors as opposed to the smaller markets there. Now, what's happened in the aftermath of demonetization is that people believe that the cash component of property transactions will disappear or will get diminished in future. Now, while that may be true, whether that will actually translate into a lowering of property prices is a moot point. For now, there seems to be an overwhelming consensus that property prices will correct by 20%, and that is what we are factoring into, let's say, loans against property that we are doing right now. So that is our working hypothesis at this point in time. But then this is on the back of very few transactions that have happened since November 8th. Registrations are down by 40% across the board.
Wow, and you're talking about the city of Mumbai or?
Bombay, they're down 20%. Across Maharashtra, they're down 40%.
Oh, wow.
So these are numbers from the registrar.
Okay, so now a lot of people might be wondering, especially those who've taken loans in the past, taken loans a couple of years back, wondering whether with this falling interest rate environment, whether they should look at some kind of a reset or should look at a switch out. First of all, if you could differentiate, among all of the scenarios, whether it's refinancing with your existing lender or opting out and looking out for a new lender altogether, and there are banks offering loans, there are NBFCs offering loans. So, what perhaps can be an interesting bet?
The first thing you should do is to approach your existing lender and say that the rate is too high. That's if he doesn't reprice your loan by himself. Automatically. So if he says that he's not able to do so, then it's worth switching if you're able to get a deal that's maybe 50 to 75 basis points better than your current home loan. Because that's normally the cost of the documentation and the cost of switching across borrowers.
Okay.
So 50 basis points makes it worth it. And if your if your current lender is not able to give you that advantage, then I think it's in your interest to shift.
Okay, all right. Let's take a break on that note. But on the other side, we're going to talk about your investments. We've discussed housing. We've discussed what you need to do in case you're looking at a housing loan or have one already. What about investments? Fixed income, equities, what should the mix be? We'll talk about that on the other side.